Hi, it's Steve and Joe from Freshagenda. And Steve, this week we've got a bit of an update from our latest Global Dairy Directions analysis that went out to subscribers last week, and of course a bit of a overview of the latest GDT result.
Yeah, which was not good.
Not good.
Okay, so on this chart, we've got on the top right there the that global milk balance indicator, which is worsening as we go through the year. So rising milk supply
Year on year, yeah.
year on year. Europe and US the main drivers of that, and then we see slightly weaker demand. So I guess the biggest risk here is that cheese slows. You know, we've seen recession boost cheese demand in the US in the past, but this is different because we've got forced closure of some channels.
Yeah, and so we're into that staggered reactivation stage that we've been talking about and trying to analyse this COVID-19 situation.
Yep.
But as we've said, it's staggered and stumbling in some economies. So that's making things hard in terms of the uncertainty for consumers and, of course, the uncertainty for forecasters.
Yeah. So fats and protein a little bit divergent there. We're a little bit more bearish on fats, with foodservice being a major driver of cream demand, or a big influence on cream demand, so that pushes more back into churns, and that's probably the biggest downside there. But protein is a lot tighter than it has been. So what
we're looking at the bottom there are stock turnover ratios to price, and the fat story is one of declining stock turnover, just given what you said about food service and lower demand. But skim, not quite so bad in terms of, that would suggest there's a little bit of upside, although you were saying that it's that price to stocks turnover ratio is not as tight a fit as it used to be.
No, you can see that there. It's drifted lower, and I guess it's more influence of there's more cheaper product around. Demand is certainly weaker, so the tone is pushing that lower. It has been for some time in our analysis. We've got some interesting views, just challenge on the demand side, that Google's conveniently putting out quite a bit of data for free at the moment.
We love these indicators, don't we?
Yeah. So we've plucked out of there some, key dairy markets and where the eating out part of those indicators is showing up the top there, and then done a weighted average on some major European and US areas, just showing how that's turning down for the US. Yeah. That we all know it.
Yeah.
But the EU's, still steadily climbing back to some normality, but that's obviously a long way off.
Yeah.
And the bottom there, the interesting thing we've created in our dashboard tool, which is an indicator of the affordability of powder demand. And those indicators, the greener, the higher the number, is the greater proportion of historical trade that's been done below prices, so below landed prices in the currency of the market. So they're weighted up, and we got more detail on that, but that's a useful indicator just to show where we are in terms of affordability. So moving on to the GDT result from last night, which was mostly negative. We saw more product. So here we are in the seasonal upswing of availability of product put on the exchange. You can see that there. That's most evident in whole milk powder.
Yes, quite a big increase there.
If anyone's surprised at the result, have a look at that. That's the chart you should look at. 47% more product sold on the event. We still had good participation from China, Southeast Asia in that commodity. We had some. Probably 15% more in the other products being offered, but still, as you can see, price is down, and there's different reasons for that. I guess the demand story is the big one, that there was much weaker demand coming to this event, and you can see that both powders were at the bottom end of experience. So those charts there show you where that event plots. We log the demand supply ratio for rounds 1 to 6 of the trading, and it showed those dotted lines are the averages of price rises and that demand supply ratio. So we're well in the bottom left quadrant in both cases, and for whole milk powder, one of the worst demand experiences in the early part. So that's why she fell. Fats were mixed. but trending down on those forward profiles. And you can see now we've opened up a fairly large gap with European product.
Yeah, absolutely.
New Zealand being significantly cheaper now, and that's where that goes is going to be interesting more for European product because the export market's going to be softer.
Well, you would think that would drag it down.
Yeah. And cheddar, I'll stay with skim milk powder for a sec. Also weaker, it's pulled the premium over European product back.
Yeah.
Not only did it fall across the board, but we've also seen the premium shrink below average now to what it was. So we've seen several events where it's been higher. And as I hinted, cheddar is a bit of a mess. Down to, for C2, down to around 3,400. But that interesting contrast there of where cheddar prices are going, looking at the red line being the line from the US, the forward prices there, which haven't changed, and where GDT's now moved down to. So
it looks like a bit of convergence, but as always with GDT and cheese, it is a little bit of a lottery, isn't it? Not much product.
That's right, it's very small product. So given that forward outlook on cheddar, it brings me to a chart of the week that you've got.
Been greedy this week, Steve. I've got 2 charts there from our weekly newsletter. The CME cash settled cheese prices, wow, they have really come back down to earth. And so it's when I was looking for our newsletter, I was looking at the oil milk price, which has done a nice big U-turn there for farmers. But given what's happening with those cheese futures, that upturn in farmgate milk price is probably not going to be sustained.
It's going to stay. So look, I think the forward view is the prices are going to stay reasonably at that level. They should hold at that for a while. There'll be a wash coming through with the prices we've
there's
seen
always
recently.
a lag. Yeah.
So when you're looking out into Q4, that really hasn't changed. That forward price in cheddar hasn't changed at all in these last few weeks. It's still pretty stuck out there. The thing that we've looked at in our outlook is what's happening to margins. And so while we probably do see prices come off a little bit in the forward view, feed is cheap in the US at the moment as well. There is a bit of it about. So that's probably still a support for production as we go later in the year. And we're still thinking that US output rises 1 to 1.5% in Q4. So that won't help the market balance.
Not at all.
Well, that's probably a good roundup. Gone a bit longer this week. I hope you've stuck with us. That's all from us. We hope to be back next week.